Good morning, everybody, and welcome to the InvestingTheRightWay.com newsletter. This is our morning update. And so, just a quick recap. First of all, just as a reminder, these videos each morning can be available in two different places. First of all, they're posted very prominently right on the front page of the InvestingTheRightWay.com website if you're finding this on YouTube and wonder where you can get more and sign up. Below that is a newsletter. We deliver that to your inbox each morning. In addition to that, this is also posted on our Facebook page. There's also a link to the Facebook page directly at the website. I'll also go ahead and put it in the YouTube description if you're finding this on YouTube. Now, let's do a recap from yesterday, because yesterday I told you I expected a red candle yesterday, but probably more in line with some sideways movement, but I would love to see a bounce off the 20, and hey, look, we got that. That's awesome. Also predicted or was expecting, I don't say prediction. Prediction is stupid, because the first time you get into the habit of thinking you're going to predict anything in the stock market, you're going to fall flat on your face. So, but we also were expecting and looking forward to a red candle on IBM, and look, we got that too. And I only bring up IBM in case you're new to this, because this is our exercise stock in trending, looking for trending patterns, and I just picked this one at random. It could be any stock, but hopefully, being able to draw trend lines and seeing trends on a particular stock as a daily exercise for some of you new guys, this will make it a bit easier. So we got what we were predicting. We are indeed moving down on IBM and pre-market trading. And if you see this right here, this is my pre-market indicator to tell me where it is that we're going to open. We closed at 161.86, and I'm going to go back to the S&P in a minute. Just hang on. Let me go ahead and switch to the minute chart. And the minute chart is going to tell me where we're going to open if we opened right now. I can't find it. There it is. Okay, and right now we would open at 160.80. So go back to my daily. That's about $1 down. That's significant. And again, with IBM, every single stock has traits and trends to it, right? And usually we don't get a lot of pre-market activity on IBM, but in this case we did, and it's pointing down, which means since IBM is located so heavily within the S&P 500 that you could expect probably a down day again. How far down? I don't know. But let me show you where we're at on the S&P. So this is SPY. Okay, and SPY is our ETF based on the S&P 500. I can't see pre-market activity on the S&P 500, but I can see it on SPY, which has virtually the same exact stocks in it and weighted exactly the same amount as the S&P 500. It's just an ETF, right? And on SPY, we closed at 206.61. Looking down here, we can see on our minute chart that we're due to open at 204.60 if we were to open. That's $2 down. Okay, now what does that translate for in the S&P 500? Well, every 10 cents on SPY is equal to 1 point in the S&P 500. So that's $2. That's 20 cents or 20 points on the S&P 500 if we were to open right now. Wow, that's what the heck is going on. Well, investors on Wall Street are saying that the reason why this is happening is because there doesn't seem to be a floor for falling oil prices. I'm not so entirely convinced that's what it is, because anytime investors are on Wall Street are telling us that something is happening because of this reason, you can bet it's pretty much a lie. They lie to us all the time. Now, it could be because of falling oil prices, but dude, I mean, prices on oil have been falling for weeks and months, and we haven't had a drastic move like that. No, I think it's just because I told you before we've had this long run, and we'll look at the S&P 500 real quick. I'll back up just a fraction. Ever since we've had our correction, we haven't had any really down movement. We've had just up movement and then sideways. And it's time for a normal breathing process. And with nothing on our event calendar to shake things up, I think investors are just choosing that this is going to be our breathe moment and the opportunity for us to bounce off our 50-day moving average. This blue line right here is our 50-day moving average. This is the 50-day front weighted. Okay, they're exponential and simple. Those are further away. So this is going to be the first instance of the 50-day moving average that we'll run into. And it looks like there's a good chance that we're going to run into that today. Hopefully we'll see a bounce. A dip below that would be a bit scary and make the markets a bit nervous. And we may see a dip below that momentarily, just, that's just normal. But I don't think I'm not really fearful that this is, the beginning of another major correction. I don't see that. I do see us dipping down below the 50-day moving average. And let me just move over our events calendar. So this is the events calendar. This comes from thestreet.com. Their market events calendar. You can see we've got nothing really planned. Wholesale inventory, treasury bills, federal funds rates. There's nothing really that's, market moving as far as economic events are concerned. Nothing like jobless claims or anything like that can really make a big difference. So I'm not really concerned about it. I think this is just a normal move down, and we're looking for a bounce off our 50-day, and hopefully we get that. Now, we still got 45 minutes before the opening. Anything can happen. We can come up off that 20 points. We could open at 5 points down instead of 20 points down. I've seen it happen time and time again. That may happen, but it looks like we're indeed going to get some push down, and I hope personally that we open below our 20-day moving average, so that we can go ahead and progress down. If we open above the 20-day moving average, that 20 day is going to offer some support, and I think we'll largely just move sideways if that happens. So that's it. That's all I got. Talk to you tomorrow. Peace out. Bye.